Great to see you, David.
Thank you for having me.
We just meet up in the greatest places, though.
Well, the weather's pretty good here right now.
It is right now. Once again, the pivot world is getting excited that there's a possibility, a pseudo-possibility, a quasi-possibility. We saw what Japan did. In Europe, the interest rate hikes look like they're moderating. Even in the United States, maybe 25 basis points. Maybe 25 basis points. Are we at that point, an inflection point today?
I think the Fed has telegraphed that it's likely to do 25 basis points at its February meeting, and they haven't telegraphed it, but it's probable that they'll do maybe 25 in March. And then I think they'll pause for a while and see what the impact is. And hopefully by the end of the year, they might be able to do the reverse and actually begin to lower rates. That's the hope. That's
crazy, isn't it? So why raise if you're getting ready to lower?
Well, it's a long period of time, but,
no, but
in the end, the Fed is very data-driven, and I think Jay Powell's done a pretty good job. He tells you pretty much what he's going to do, and then explains it afterwards. The Fed used to not do that.
Although and Leisman has made the point, they're not, or at least they were vociferously saying they're not data-driven. They're going to 5.25 come hell or high water.
I think they look at the data that comes in. What they do might be different than what other people might think they should do, but they pretty much look at the data and they carefully analyze it. And we have an advantage with him. He can talk English. He doesn't speak in what I call Fed speak. So when he talks, you can really understand what he's saying, and I think that's a plus.
So what would you tell your people to do in anticipation of that environment at this point?
Well, in my own view is that the best time to invest is when there's some uncertainty or when the economy is seen to be a little bit nervous in terms of where it's going. That's the best time to invest. It's not when the markets are going this way. So I think
we're there. I mean, we were talking to Steve Schwartzman yesterday. He seemed to think we're there, but maybe not even fully there. Like there's still.
David Solomon just said the same thing.
I think we are. It's a good time to invest now because I think the markets are not going to see another 20% drop in public prices. I think that's probably past us, and I think we're probably coming back to the point where people are going to feel very comfortable investing, at least in my view. And I think prices between the sellers and buyers are still a big gap, and because the sellers are afraid that
they're holding on,
right. And the buyers don't want to look stupid by buying now. But there's too big a gap, and that is a bigger problem than anything else right now.
The private has some catching up to do with the public, too. Is that what you're saying?
The private marks haven't gone down as much as the public marks have gone down. And there's some people think the private marks should have a different standard, and maybe they're not really being accurately reflecting what the real value is. But I haven't seen that. I think the private marks are pretty accurate. And I think based on what I've seen, private marks are not going to see a big drop, anything like the public marks.
Fiscally, do we have some concern, would you say? You've been around a while. We're never at 120% of GDP. We've only been at 120% of GDP as far as debt twice in the last 100 years. And this is one of those periods.
That's right. We're matching Italy. Italy and Japan are the only people that are comparable to us. It's not great. We have one advantage over other countries. We have a printing press that, for some reason, people want to buy our dollars. We don't have a sovereign wealth fund, but we have a printing press, and that's in effect our sovereign wealth fund. So it's not great to have $31.5 trillion of debt, and we're going to have more. But I think it's sustainable. It's not great. I'm not in favor of it, and I wish we could do more about it. But I don't think the economy is going to collapse over it.
How would you do more about it? Are you unhappy that gridlock is forecast for the next 2 years?
Of course, gridlock is never a great thing in anything in business.
You're unhappy. Would you like to do more after what we did for the last 18 months?
I don't think gridlock is ever a good thing. It's not a good way to run a government.
Some people think it is.
No, I don't think anybody thinks gridlock is a good thing.
I do. So I'm somebody.